without further ado, let's take a look and see what is happening in Dallas County over the last 7 days on today's Market Watch.
Last week in Dallas County, we had zero change in the number of coming soons.
That's amazing.
Zero, yeah. 69 last week, 69 or 2 weeks ago, and then 69 last week. New active listings were down about 10%. A little bit of a surprise there. There were still 370 new listings that came in Dallas County. And then option period, that first little caveat of the contract that you go into is called the option period, and that's down by about 2% last week.
Yep. And so once an option period has been fulfilled, you move into pending status. And pending, that is down 16%, 141 versus 168 last week. And then sold, so now we're all done. This is 295, which is up 2% versus 288 units last week. And interest rates have dropped almost a quarter of a point to 6.48. One of the things just to remember is that last week was spring break, and so we're taking that into consideration for the next 2 weeks. They will be stabilizing. We will get back to a full-blown spring market here shortly, but those are the two big factors that have taken.
Yeah, and the bank failure also kind of put a little hiccup into the financial market, and the bond rates went way up, which caused mortgage rates to come down a little bit. And I think we'll see a little bit of variation. You know, if nothing else from those two, I think now potentially three bank failures, it looks like the silver lining, I hate to ever say, the best thing about it, but maybe the silver lining is that it will have tamped down inflation enough the Fed can stop raising interest rates. That would stabilize long-term rates in the mortgage market. And I think more people feel more comfortable buying a house.
100% on that, because, for one of the first economic conferences that we went to, the speaker was actually from the bank here, the federal bank here in Dallas, and said that he expected rates to rise 2 more times, and that because of this new development within the banks, that actually might be off the table, and we actually could be now looking at a nice mid-6, low-6 for the rest of the year, and I think that stability will give buyers a lot more incentive to get out into the marketplace.
I think so, and really those are kind of to me, having the 3% rates for so long, they were just felt artificially low.
100%.
And now, if not that I would pay, want to pay 3% over or 6% over 3%, but it feels like that's a more reasonable number with everything else, less volatile number with everything else that's going on.
And I think it could be the new norm. Fingers crossed it gets there and just stays put, and people understand that.
Cool.